Hey guys, good afternoon, everybody. Today is Tuesday, April 25th. It is 2 o'clock right now. Our scheduled mentoring sessions for 2. So I'm going to go ahead and set up this room real quick, and then we will get started with our mentoring session for today. If you guys have any questions, feel free to put them in the chat, and I'll cover them as they come in order. Otherwise, I think we're just going to review some of the strategies today. So a couple of things here to update. And we should be good to go. So a few more things here. That's good. All right, so let me get this link sent out to you guys here in the premium. Perfect. So I'll get a few moments for people to make their way in, and then we'll get started shortly. All right, I'll get a few moments for people to make their way in. Good afternoon, everybody. Today is Tuesday, April 25th. It's 2:02 right now. Scheduled mentoring sessions for 2 o'clock. I don't really have anything on the agenda for today. Main thing I'm going to do is probably focus on the entries that came up today. If you guys want me to review any of the strategies, feel free to let me know, and then I will review them for you guys. Hey, Martha, how's it going? Hey, Johnny. Hey, Christian. Hey, guys. So I'll give it a few more moments for people to make their way in. If you guys have any specific questions, feel free to put them in the chat, and then I'll cover whatever questions you guys have. Other than that, we will just wait for more people to make their way in. Let's see. Christian said he'd like to see an example of the V1 variation. Yeah, we'll take a look at that. All right, so we basically have one question from Christian. He wants me to cover some V1 variation entries. That's pretty much the only question I have right now. So I'll start off with that first. And if you guys have any other questions, or you guys want me to dive deeper into whatever we're looking at, feel free to let me know. So let's see. Hey, CJ, how's it going? Hey, Dan. All right, guys. So let me see. I don't remember what the bias was this morning. I'm assuming it was a bias because all of my entries from today were buys. That's all I can remember. So these are the trades I took for today. I'll go ahead and take a look at some buys then. So let's go back to it's like 8 o'clock today. So let's rewind it to about 8 o'clock. I'll do like 10 o'clock or somewhere around there. All right. So I think it was buy for the most part, but it wasn't necessarily buy the entire day, because I know like the fundamentals were kind of all over the place. But we'll look for some buy examples regarding the the V1 variation. So let's start off by looking at, I'm just going to pull up the first one I see, and then we'll take a look at it. I think this might be the first one right here. Yeah. So I think this is one that I actually took. Yeah, no, definitely. So Johnny wants me to take a look at the SR rejection, the breakout 2.0. So we'll start off with the V1 variation, and then we'll move on to the SR rejection. And then I'll also cover the breakout 2.0. So let's start off with that first. First off is going to be the V1 variation. there's any question that you guys have regarding the strategy or any other things like related to it, just let me know, and I'll try to explain it along the way. But let's start off with one example of the V1 variation. So for today, this morning, I remember we had a bullish bias. The only reason I remember that is because all of my trades for today were buys. So, pretty much safe to assume that we had a bullish bias today. I'm going to put the criteria for the V1 variation over here. I know that there was a couple that were aligned. There were some that weren't, but I'll try to break it down as easy as possible. So with the first criteria over here, first you want to confirm the overall bias. If you guys remembered from the live session, I mentioned that the retail sentiment was like 78% short. Let's see what it is right now. It's 63 now, so it kind of lined up a bit, but it was 68% short earlier this morning. So what this basically tells you is it lets you identify where the retail traders are trading. So if it says 68% short, this means that 63 or 68% of retail traders are selling at the time. And with that said, you typically want to do the opposite. So with that said over here, first criteria for overall bias is retail sentiment. That's going to be bullish because it was 68% short this morning. For the fundamental bias, this was pretty much neutral. If you guys remember from this morning, fundamental bias was around I think 80 points in the negative or 50 points in the negative. In order for it to be a sell bias, you would need to have the fundamentals under 100 points. So let me check right now to see what it looks like. This is obviously after the market. So this here is not valid with this specific entry because this is the fundamentals right now. So you can see right here, it's down 300 points. This is going to show that it's in a strong sell bias. But earlier this morning, it was down I think negative 50 or negative 80. So with that said, we'll say that retail sentiment was bullish, fundamental bias was neutral bearish, and the technical bias this morning was very bullish. If you guys remember from this morning, it's obviously bearish here, but earlier this morning it was bullish down here between 7 and 8 basically. It was somewhat bullish. So with that said, we're going to assume here that we had a bullish bias. First criteria is to confirm the overall bias. We had bullish retail sentiment, neutral bearish fundamental bias, and technical bias was bullish. So you have 2 out of the 3 which are bullish, and we're going to assume that the overall bias was bullish. Second, you want to confirm the high-low using the high-low indicator. Right here, you can see that there's a high-low. At this point right here, that's going to be step 2. So step 1 and 2 have been met. Step 3, you want to confirm the candle following the high-low is a double wick or a double body. It just has to be both candles right next to each other. It doesn't have to be necessarily the one after it. It can be the one before it, but it just needs to be the one right next to it. So right here, we have a lower low. We have these right here on the same level, as you guys can see. It's a double body rejection. That's going to satisfy step 3. Once it confirms step 3, you can move on to step 4. You want to confirm that there's a pending momentum in the direction of the trade. So right here, we have a sell signal. That means that the next signal has to be a buy signal. So with that said, we do have a pending momentum for a buy. Since we have the rejection on the bottom end, we're looking for this to push to the upside. So once that there is lined up, you would take this here for a long position right there. You go for a 1030 split. You let the trade run. And there you go, full TP. So there goes an example of the V1 variation. I think this is one of the entries that I took. If you look at the timestamps here, this entry came up at 7:37. My trade right here where I made a profit of 2020 was at 7:37. So I took that same exact trade right here. So I took that trade and I actually took the one right after too. So I took this one, it hit my full TP. And then I also took the one right after it right here for a high-low momentum scalp, which also hit our TP. So it went sideways for a bit, but eventually came up and hit TP. So 2 back-to-back entries right there. There goes an example of the V1 variation. Do you need another example, Christian, or is that one cool? I'll just show you another quick one over here. So there was one right there. And then I'll show you one last one right here, just a quick one, since we already have everything marked up here. So again, same thing over here, V1 variation. Overall bias is bullish. We have a high low right here. Candle right next to it is a double body. You can see they're on the same level right there. We have a pending buy signal since there's a sell signal right here. With that said, you would take a buy position right here. Go for 100 pips. Because this is a reversal pattern, you're expecting price to correct back to the upside, reverse into correction. Next candle pushes up, and there you go, full TP. So with that said, there goes another example right there. All right, so there's an example of the V1 variation. As I mentioned on the live session, guys, our main strategy that we apply is going to be the high-low momentum scalp, but this strategy works in conjunction with the V1 variation. Because what you'll see a lot of times is you'll see a V1 variation come up, and then right after you'll see an actual entry. So this here wasn't an entry, but I think the one earlier or the one after was a clear example of it. Okay, so there's an example right here of it. So these are how they kind of work in conjunction. So first the V1 came up right here. And then right after was a high-low momentum scalp right there. So pretty much two back-to-back entries. They typically line up after. It'll usually start with a V1 variation, and then from there it'll push up and provide an entry for a high-low momentum scalp. So if you guys want to apply that, that's something that can be applied, of course. Other than that, let me see if there's anything else here. So I think that's it with the V1 variation. Next question is from Johnny. He's asking if we can take a look at the SR rejection. I think there were some SR rejections pre-market. Let's see. Yeah, there were some SR rejections right here. Let me show you an example of it over here because it's a lot easier to see these that came up. I'm going to turn on the rest of the pivots because they're all relevant. Okay, so the first entry would be this one right here. So let me open the criteria for the SR rejection. All right, so we're looking for a buy here. The reason why we're looking for a buy is because we already confirmed that the overall bias was bullish, right? So the overall bias here is bullish. We're only going to look for buys. First, you want to confirm that you're trading in the direction of the trend using the trend meter and the K2 pivots. So looking at this down here, you can see from the trend meter that the trend meter is green. That means that it's bullish. And then on top of that, you can see that the pivots here are angling to the upside, prices above the pivots. This indicates that we're in a bullish trend. So since we're looking for a buy here, we confirm the trend, it's bullish. Second, you want to identify a bottom wick rejection off the K2SR V2 zone. So let me go and just mark up the zone over here. So in order to get these zones, you need to turn on the K2SR V2 indicator. Here's a clean chart. You turn it on and you can see the zones on the chart. Basically what you're going to do here is you're going to identify zones where price is likely to reject from. So you can see here that it's a bit of a mess. It's not always like this. You can see down here that it's a little cleaner, but these zones down here are pretty much irrelevant, right? Because we're not really looking for zones down below. We're looking for a zone that's up here where we can find rejection. So the zone that we're going to use is going to be this one right here. It's going to be this one right here. You can see that we have a zone right there marked up. I'm going to go and turn this off. And now I'm going to go ahead and mark up the criteria. So here's the SR rejection scalp. This strategy, again, guys, is typically one that is this is one that's typically used during sideways markets. The market it's been kind of iffy like the past couple of weeks. Sometimes it's sideways, sometimes it's directional. Mostly it's directional, but lastly, for the past couple of weeks, it's been moving sideways more often than not. So with that said, right here, we're looking for a buy. We confirm the trend rate, it's bullish. Trend meter down below is green. Price is above the pivots. Pivots are angling up. We have an obvious strong bullish bias here. So with that said, we have step one met. Step one is going to confirm that we have a bullish bias with regard to the trend. Second, you want to identify a bottom wick rejection off a K2SR V2 zone with a moderate green candle. So with that said right here, we have a strong green candle. The reason why it's strong is because there's no wick on top and it's a full green body. So with that said, This right here would be a strong green candle, and you can see that it's rejecting off the zone down below right here. So with that confirmed right there, we can move on to step three. Step three, you want to confirm that you're trading in the direction of momentum. In order to do that, you just want to look back at the most recent momentum signal. You can see right here that we have a green buy signal. This is going to indicate that we have bullish momentum. So requirements 1 is met. We have a bullish trend. Requirement 2, we have a rejection off the SRV2 right here. Third, you want to confirm you're trading in the direction of momentum. We have a buy signal right here. And lastly, you want to enter on the open of the following candle and then aim for 100 pips. So same setup right here. We have the entry, everything's lined up. You let the trade run, and you can see right there, it blasted right through its full TP. So there goes one entry right there. And that's an example of an SR rejection strategy. So let me see if I could find another one here, Johnny. This was pre-market. I'll see if I can find one that happened during the actual session. I think that'll be a little easier for you to see. So let me go over here real quick. I'll just go run through it. 630 is right here. There's obviously, SR zones around that area. All right, there's nothing here yet. See if I can find one. I know the trend was bullish for the most part, so we're probably going to be looking for buys here if I can find one. See, I'm looking for a strong green candle with a bottom wick rejection. All right, so I do see one right over here. The zones are like super messy, so it's kind of hard to see, but I do see one. This one has a big wick on top, so I'm not gonna identify that one. But it looks like we have one, let's see, right over here. They're just kind of hard to see because of the mess. We could just use a small, or we can use, I guess this one's probably the easiest one, because I'm looking for one that's like really clear. Okay, so again, we want to confirm that you're trading in the direction of the trend. Right here, we have a green trend meter, prices above the pivots. Pivots are angling up. What I'm going to do here is I'm going to go and mark up the zone right here that we're going to identify. It looks like the zone right here is going to be, you see where it started from. Started from right over here. So you can use the SR indicator and just leave it on if you like, but I like to just turn it off. So I draw my own zone right there. I'll turn off the indicator. And as you can see right here, we have the setup. So first you want to confirm the trend. Obviously trend's bullish right here. Trend is green, pivots are angling up. Price is above the pivot. Step 1's met. Going over to step 2 right here, you want to identify a bottom wick rejection off the K2 SRV2 zone. With that said, we have this candle right here rejecting off this zone. So we have that lined up right there. Third, you want to confirm that you're trading in the direction of momentum. So we have a strong green candle right here rejecting off the zone. Again, the reason why it's strong is because there's no wick on top. There's a nice wick on the bottom pushing away from it, and it's pushing away from the zone. Third, you want to confirm you're trading in the direction of momentum. We have a buy signal right here. There's no signals in between. So with that said, we have a bullish momentum. Once we've confirmed that, you can enter on the close of the candle right here. Go for 100 pips. You got a nice setup right there. You let the trade run. And there you go, full TP. So another example right there. Johnny, if there's another example that you want to see, feel free to let me know. I feel like this strategy is a lot. You learn it a lot better if you practice it on your own, because it's really hard for you to like learn it by just listening to me explain. Because obviously I'm going to find like the best examples to show you, but I feel like this specific strategy is easier learned by trial and error, because you're going to see a lot of entries and they're not necessarily going to be like as clean as this one. Like you're not going to see a lot of strong green candles like this. I just picked this one because it's super obvious that it's a strong green candle. The problem with this strategy is that it's a bit subjective, because some people will identify some certain candles as strong and some as not. Like for example, this one right here, So this candle over here would not be considered strong in my opinion. This one that I'm pointing at. The reason why it's not strong is because there's a bigger wick on top. The body of the candle is about the same size as the wick. So this shows that it's not a very strong candle. This one right here has no wick on top. There's nice rejection off the bottom. It's a strong candle in general, a strong body. So this is strong. I consider this strong. I consider this somewhat strong. The reason why I consider this strong is because the top wick's not that big and the body's a lot bigger than the wick. This one right here is weak in my opinion, and this one right here is neutral. So it just depends on how you guys identify, but I think that's the hardest part for a lot of people applying this specific strategy is identifying, weak to strong candles. Question from Dan. Dan's asking, hey, Sean, just to check, did you decide on that zone because of the amount of candle inside the particular area? No, I just decided on the zone because that was a zone that this candle was rejecting off. So for step 2 over here, you're just looking for a rejection off like one of the zones, right? So, I mean, there's a lot of zones here. And in order to identify where the zone originates, you just go to the left. So let's see. The candle's right here. And I don't think there's any other zone that rejects off it. There's a zone like right here, but it's not relevant because it's not rejecting off that. So the candle is right here, right? If we were to use this zone right here, it's irrelevant because there's no rejection off that zone. I just use that zone because that's the one that was rejecting off. That's part of the criteria. I'm gonna see if there's any other one here. There might be one more right here, but it wouldn't matter because, so for example, here, see how this zone overlaps with this one? What you would do if that's the case is you would just overlap the zone. So you'd have one big zone instead of a bunch of zones, right? Or you would just draw like a huge zone. So for example, right here, this zone overlaps with this one. And it also overlaps with this one right here, actually. So you would actually have a huge zone right there. So these are 3 zones that overlap each other. If they overlap, they're just one big zones. So if I turn this off right here, it would just be a big zone. So it'd be the same zone, but you're just pretty much overlapping them, right? So it's not specifically a particular area. It's just wherever the zones are. So let me show you an example of how I would draw the zones if I had a clean chart. So let me just take everything off the chart real quick. I know I haven't done this in a long time, but nothing has changed. It's exactly the same way. So what I'll do here is I'll turn on the SRV2 indicator. I'll zoom out and I'll go from left to right. So I'll go up here. I got a zone right there. I'll just make it to the right so it's not as messy. So you guys can see right here. So here's a clean chart with just the SRV2 indicator. I'm going to go and draw zones from left to right or from like wherever it starts. So the zone originated right here. Again, right here, I'm going to go to the far left. See how this zone's by itself? That'd be by itself. This zone over here pretty much overlaps with this top zone. So I just connect those together. This lower zone right here overlaps with this one. So I'm going to create one big zone. Again, right here, I'm going to start on the left. You can see how this zone over here overlaps with this one. I'll go ahead and just draw this right there. And then I'll pull it down a little lower to get confirmed to that zone. Another one right here on the left side. This doesn't overlap. Another one right here. This doesn't overlap. Another one right here. This doesn't overlap. And lastly, this one down here. So if you want to look for rejection points, you can just turn on your K2SRV2 indicator, turn that off, and you can see right here that we have perfectly marked zones, right? So you can see exactly where price rejects from. So it's pretty, I mean, this is pretty useful if you're looking for rejection points. So, I mean, if you want to do this, you can do this and just draw your zones up before the market opens, and then you'll have a bunch of zones there. But I mean, it's just really up to preference. I don't like doing this too much because it makes a mess on the chart, but you can see that we have a ton of zones right here. So that's why I created this indicator to identify zones automatically for you. So you don't have to do it yourself, because that's typically what a lot of people screw up on, right? Identifying proper zones. These zones are created if they're tested more than twice at the exact same price point. So I basically created this indicator to identify where the algos are trading. Because, you know, like bank algorithms, they trade at specific price points. It's hard to tell, but with this algorithm that I created myself, I'm able to identify where they're trading because I can see where, their computers are taking buys and sells, because whenever they get touched at the same exact price point, that's where my indicator will produce zones. So super simple. Martha's asking, so 2 or more rejections. Yeah, that's how the zones are created, but it's going to be impossible for you to identify that by eye. That's why I had to create the indicator. You can't just look at the charts and say, okay, this price is going to get tested twice or 3 times, right? It's just impossible, especially on the 1 minute chart. There's so much going on, so you can't really check it yourself. But yeah, I'd prefer to just, or I'd recommend to just use the indicator, because it pretty much just does everything for you. It automates it. Yeah, no, I know, Martha. I was just letting you know so that you have an understanding as to, like, how these zones are produced. You can probably do it by hand if you're on the higher time frames, but I still wouldn't, right? I'd rather have a computer do it for me so that I have the exact price points, because you can do this on any time frame. This is the 1 minute. If you want to go on like the 10 minute, if you want to trade on higher time frames, you can do the same thing. You turn on the SRV2 indicator and you do the same exact thing here. You can see exactly where price is rejecting from on these higher time frames. So you can literally do the same exact thing, but on obviously higher time frames here. So if this is I know some people like to just trade support and resistance. If that's how you like to trade, this indicator is like your best friend, because it literally does everything for you. Like, you don't have to do any work. You kind of just turn on the indicator and then you just draw the zones up. Yeah, we have some traders in the group. They don't necessarily trade my strategies, but they use my indicators. And they're really good at like trading support and resistance. So like, for example, here, if you were to have this marked up, you can see where these perfect zones are pretty much aligned. And look where price comes. Look where price rejects from. So see how price goes into these zones? When you guys have the indicators, it pretty much does all the work for you, because it just automatically plots it. So, all right, I think that's it for that right there. Johnny, if there's any other questions that you have regarding the SR rejection strategy, let me know. But I think that strategy is best learned practicing it on your own. So I'd recommend practicing it. And then if you find some entries that you're confused about or something that you need like clarification on, just let me know and I can confirm it for you. Yeah, there's just too many examples that I can show you. And it's gonna be difficult for us to really dial down on it, unless like there's a specific entry that you have a question about. Let's see. Johnny said, cool, thanks, bro. What would you say would be the top 3 easiest strategies to follow and apply to pass the 100K challenge? So I wouldn't say easiest strategy because, I guess so the SR rejection is like one of the best strategies. That's like Dijon's favorite. A lot of people actually like that strategy. It's basically a spinoff of the snipe strategy. It's just on the lower time frames. So I would personally apply that strategy, but if it's too difficult for you, then don't bother, because there's a lot of mistakes that can be made applying the strategy. I think the second criteria is probably gonna be the hardest one, but this is a good strategy to use if price is ranging and going sideways, because you're basically identifying breakouts before they happen. So I think the main strategies that you could possibly focus on would be the high-low momentum scalp. That'd be one of them. Sorry, guys, 1 second. All right. So as I mentioned, the high-low momentum scalp would be probably number 1. Number 2 would probably be the so if the market is trending super heavily, I would apply the V1 variation and probably the high-low scalp. Let me see if there's anything else on here that I would probably recommend. I got a lot of strategies. It's hard for me to like really triple confluence too, but this goes hand in hand with like the high-low scalp. So this right here would basically go in conjunction with like the momentum scalp. So you can probably look at this. It doesn't come up very often, but when it does come up, it like almost always hits, like literally almost every time it plays out. So if you could learn this one, I think this one's probably going to be your best bet to have like almost like guaranteed wins. There's losses that happen with it, but the losses rarely ever happen. So like, let me show you an example right here of a triple confluence. There's actually one right here that I just saw. Actually, this doesn't meet criteria because the trend meter is not red. Let me see if there's another one here. This was like late in the session, so I don't think there's. No, the market kind of died down a bit on this time. Let me see if there's one over here. I know there was one today because we saw it today on the live and I missed it. I should have taken it. But I know there was one that came up today and it was a freaking like super smooth entry. It was like a buy entry. And oh, it's right here. Or no, it's not it. It's at 9. It was like during the live session. This one right here, I remember this one. Okay, so the reason why this one was good is because we had a strong bullish bias. So if you guys remember from the live session today, we had a really strong bullish bias right here. This strategy doesn't come up very often. It's 3 strategies in one. So it's basically the intraday scalp, pivot scalp, and high-low scalp. It's 3 strategies in one. That's why it's such a good entry, because you have 3 high win rate strategies basically incorporated into one. If you guys remembered from like last fall into last winter, we applied the strategy a lot and it didn't have a loss. So I don't think we ever had a loss applying the strategy on the live sessions, like never. So never had a loss with this, but it doesn't come up too often. It might come up like a couple times a week, maybe like once every couple of days. But when it does come up, it's pretty, it's pretty solid. So looking at this right here, first, you want to confirm the overall bias. We already assumed that it was bullish from this morning. So we're just going to say it's bullish. Confirm a valid momentum signal. There's a valid buy signal right there. Third, confirm that the signal matches a trend meter. It's a buy signal matches the green trend meter down here. That's just the intraday scalp strategy. Fourth, you want to confirm that price is above the pivots. With that said, it's going to be a pivot scalp. And then fifth, you want to confirm that price is breaking and closing past pivot, past 5. So, or sorry, step 5 is confirm price is breaking, closing past the high low. So with that said, we had this high low right here. This candle was a buy signal, broken close past that high. Trend meter was green, price was above the pivots, everything was bullish. This would be a perfect entry for a buy. Applying the triple confluence, go again for 100 pips right there. Let the trade run. And you can see right there, it blasted right through a full TP. So this is one of the favorites that a lot of people like to apply. It doesn't come up very often, but when it does come up, it's like almost a for sure hit. So definitely one that, I'd probably look at if it does come up. So this is something that's like, you can just have in your back pocket. It's like one of those strategies that you don't really look for, but when it does come up, you just take it. So that's one that you can look for, Johnny. Yeah, but again, the ones that I mentioned over here, basically, so the thing with this, Johnny, is that there's no easy strategies there's no like special ones I'd select. They all work. This is why I always tell people to apply the strategies, practice them, and figure out what you like, because they're all the same type of strategy. They're all momentum scalps, or they're all momentum based and trend based. So it doesn't matter what strategy you're applying. They all work perfectly fine. It's just, just because it works doesn't mean it's going to work for you, right? So these are the ones that I'd probably recommend, but this doesn't necessarily mean that you should be applying them specifically, not just Johnny, but like everybody in the group, right? I created like over 30 strategies because everyone has different trading styles, different preferences. And it's just up to whatever you want to apply. Because I can apply every single strategy here and I'll make money on every single strategy. It doesn't necessarily mean everybody will, because not everyone's able to mesh well with the criteria. So I think these are the main ones that I would take myself. But again, it doesn't really matter. Like some people just take the breakouts and they make a lot of profit. Like Kenny every morning takes the breakout. Like he's one of the people that still takes the breakouts every day, and he makes profits like almost every day. He doesn't make a crazy amount of profits, but he does make profits on it. So let me see if I can find Kenny over here. Let's see. Yeah, so Kenny, this is Kenny from Friday. he took breakouts, right? He always takes the breakout on open. You know it's the breakout because he takes it on the immediate opening candle. So there's one right here at 7:01, or no, sorry, 6:30. So he took a breakout right here at 6:35. You can see these 3 entries right here are part of the breakout. He takes that right there and it wins. Another one from Kenny. This is from the day before. You can see the timestamp, 6:35, right? Because he took that breakout. The breakout's not like, a lot of people like the breakout, but a lot of people hate it. So it's just really up to preference. It just depends on how you guys want to apply it. But if you were to apply, or if you're looking for like my favorite strategies, it'd probably be these. But I mean, there's no preference here. Like literally all this, I don't give you guys like strategies that don't work. Literally all of them work. It's just if you're able to actually follow directions, right? That's why I always recommend the high-low scalp. The reason why we do this on the live session, why I recommend it, is because this is like the easiest strategy. Like it's so dumbed down for like anybody to apply. There's only 2 criteria there, but people still screw it up. Like I don't know, like I don't know how to make it any easier. The strategy is literally 2 criteria, but people still screw up the strategy. But this is like what I would recommend to everybody, whether you're a beginner, whether you're a veteran trader. This is probably the easiest one to apply because you don't have to look at overall bias. If you look at the V1 variation, you can see right here, step 1, confirm overall bias. A lot of people can't do this right. So that's why I don't really push for this strategy as much, even though it does work. 2 of my entries from today were from V1 variations, right? I took one over here, which was a high-low momentum. This was a high-low momentum. This was a V1 variation, and this was a V1 variation. So the strategy works fine. It's just if you're able to follow directions when applying it. And it's not just to you, Johnny, it's to like everybody. Everyone's always looking for that perfect strategy. There's no perfect strategy because everybody's different. So it's really up to preference. But if you want to apply these right here, Johnny, you could. These are all like really fast-paced strategies though. So if you're not fast enough, it's going to be difficult. So I'd recommend just sticking to one strategy, which would be this one here. And then once you master it, then you can move on to other ones. But if you try to learn like 2 or 3 strategies at once, odds are you're probably going to make a lot of mistakes and you're probably going to blow your account. That's just like from experience, not from me, but from other people in the group. Because I've helped people before and people just get greedy. It's like everyone's problem. They're making enough money on this, but they want to toss in like another strategy. Sorry, guys, 1 second. Sorry, guys, my dogs are barking. So let me see. Yeah, Johnny said for sure. So figuring out the top 3 strategies to apply comfortably. But yeah, the high-low momentum strategy is number 1. Everybody. Sorry, guys, 1 second. All right, guys. Sorry, I'm back. So what I was saying earlier, yeah, like so Johnny said that the momentum, high-low momentum scalp is his number 1. That's key. I think that's like something that you focus on. Once you like mastered it, then you can move on to other ones. But I recommend just sticking to that one first. And then once you're good, then move on to the second strategy and the third strategy and the fourth strategy. But what I've seen with a lot of people, not a lot of people actually, like a good handful of people, they don't even get this strategy down, and then they try to move on to the second strategy, and then they just screw everything up, right? So my recommendation is to just stick to one, and then once you're good, move on to the second one, because you're not going to be a professional trader tomorrow, guys. Like, face it, it's not going to happen. I've been trading for 10 years. That's why I can learn this stuff and I can apply them like super easily. It's like when you guys watch me on the live session, I don't really have to think. Like I'll be looking at the charts and I'm like, okay, there's a V1 there, and there's a high-low scalp there, and there's a triple confluence there, and I can just take them. But if you guys are a new trader, or not even new, if you guys are just been trading for like a couple of years or not even consistently, you're not going to be able to pick up like 3 strategies or 4 strategies at once. So that's what I'd recommend, guys. So other than that, let me see if there's anything else here. But yeah, Johnny, if there's any other questions, feel free to let me know and I'll try to, take a deeper dive on that. Otherwise, I think that's it for the man, I forgot what strategy you even asked about, Johnny. That's it for the SR rejection scalp. Okay, so the second question you had was regarding the breakout 2.0. So let me pull up the breakout 2.0. Yeah, so the breakout 2.0, let me see if I could find, or I got to go and just do this on here. Let me go to the other time frame. This one. All right, so confirm the trend on the 10-minute, 30-minute, and 1 hour. Let me show you how to apply this one right here, Johnny. So this is going to be breakout 2.0. Let me just clean this up a little bit. Turn on the pivots. Sorry. I'm not really on this chart too much. So it's kind of like glitchy. Refresh it. All right, so first you want to confirm the trend on the 10-minute, 30-minute, and 1 hour time frame. So let me go over here real quick to Tuesday, pre-market, market open right here at 6:30. All right. So the thing with this strategy, Johnny, is that it's hard to apply right now because there's not much volatility. This move here is for 1,000 or 1,500 pips. The market hasn't really been moving that much lately, not enough to cover that. So it's a little difficult to apply it. But let me show you an example of it. I don't know if it came up today, but we'll see if we can find it here. Okay, so I don't think there was an entry today because you can see from the charts just by looking at it that there was no strong bias this morning. All right, so first you want to confirm the trend on the 10-minute, 30-minute, and 1 hour timeframes. As you can see here, it's bullish on the 10, it's neutral on the 30-minute right here, and it's bearish neutral. It's just neutral right here on the 1 hour. So in order for you to take the breakout 2.0, you have to have a pretty confirmed direction. Like you can't have anything in between. The 1 hour right here is below the pivots. It's actually in between. The pivots are actually bearish. Trend meter is green for whatever reason. Let me see. Yeah, it was just a trend from this morning. So the trend was attempting to shift to bullish, but it was still bearish. You can see over here from previous days, it was bearish. And then this one right here, I mean, just looking at where price is currently at on market open, you can't say that this is bullish, right? Because price is not even above the pivots. It's not above the pivots. Pivots are angling down. Same with the 30-minute over here. Price is like barely crossing the pivots, and the pivots are kind of going sideways. The trend meter down below is also blue, so it's pretty much irrelevant. So there's no entry for the breakout 2.0 this morning. Let me check if there was one on Friday. Let me go back real quick. Yeah, let me go over here to Friday. Or let me go to Monday, actually. Yeah, the breakout 2.0 doesn't come up very often. It comes up every once in a while, but not super often. So let me go over here again real quick. All right, so there might be one here on Monday because I think Monday was a little more bullish. So let me go over here to Monday. All right, so there might be one right here. Monday at 6 o'clock. All right, so this one isn't as strong, but I think this could possibly be used as a criteria. So looking at this right here, let me just scroll up real quick. So this is kind of hard to gauge. So this is what market was pre-market for the 1 hour. So the 1 hour here is still kind of neutral. You can see prices in between the pivots. The 10-minute over here, or sorry, 30-minute is bullish, and the 10-minute is bullish. So let me put up the criteria again right here. This is for the breakout 2.0. This is opening candles. You have to go back by one candle right here. Okay. So looking at this here, the first criteria is to confirm the trend on the 10-minute, 30-minute, and 1 hour time frame. So the 10-minute right here is bullish. Obviously, price is above the pivots, trend meter is green, pivots are angling up. This is a bullish trend. Here on the 30-minute, you have the same thing. It's not as strong, but it is still bullish. You can see prices above the pivots. Pivots are angling to the upside, and the trend meter down below is green. Lastly, over here on the 1 hour, you can see that this is a little more iffy because the trend meter down below is blue. The pivots right here are barely shifting to the upside. They're technically still down, but they're shifting to the upside right here. But you can kind of like, depending on how risky you're feeling or, you know, how confident you feel about the position, if the sentiment was like really strong, the overall bias was bullish, you can probably still take this trade. So say, for example, you identify this as a bullish trend, right? Which you can kind of do. It's more of a bullish neutral because the 1 hour here is not very bullish, but the 30-minute and the 10-minute over here is bullish. So once you have that lined up, you'll move on to step 2. I'll just maximize this one right here. For step 2 right here, you want to confirm the direction of momentum. So right here, we have a buy signal. So you confirm the trend is bullish. You confirm momentum here is bullish. Now you'd enter on the opening candle, which would be right here. You want to gauge like how much the distance will be for the move. You'll first do 1,000. And you can see here that the range is not that wide, right, Johnny? So like, for example, if you need to hit your TP up here, the range is not that wide, right? The highest price got was like right here. So you might be short-handed right here if price ends up getting to this point and then it comes down. So this strategy right here is good when the market's very volatile, but it hasn't been volatile for the past couple of weeks. That's why it's a little difficult to go for these bigger moves. If that's the case and it's too big, you might just want to skip it. But we'll run this through and we'll see if it plays out. So this is the entry right here. Let the trade run. And it actually does play out. So you can see right here on the first candle that actually pushes up straight to full TP. So does that make sense how it's applied, Johnny? We just don't look at it too much because it doesn't come up very often. But first you want to confirm the trend on basically the 10-minute, 30-minute, 1 hour time frames. This is pre-market. So market opens at 6:30. You probably look at this around like 6:20, close to 6:30. And then once you confirm the trend, you just want to confirm momentum. So again, we confirm the bullish trend. We confirm the momentum right here. And then you would just take the entry right there and then write it up for about 1,000 pips. I for sure would not go for 1,500 because obviously you can see right here, it barely reaches 1,000 pips, right? Because the highest point is right here. And this is up until like Friday. So you go back to Thursday and it's up here, but that's like 4 days away, like, 4 days back. So this is pretty much relevant because volatility is not going to be the same on Monday than it was on, Thursday. Let's see. Johnny said, yes, thanks. Would you say the breakout comes up more often than the breakout 2.0? Yeah, I would say so. The breakout comes up like almost every day. It just depends if there's a bias. If there's a bias pre-market, like so you don't confirm the overall bias for the breakout 2.0, you just look at the trend. It'd be beneficial to look at the overall bias, but if you're just looking at the overall bias, pre-market, you're just looking for a push in that direction. So yeah, I would say that the breakout does come up more often than the breakout 2.0 because it doesn't always line up. Like the 10, 30, and 1 hour don't always line up together. But if you're just looking at the overall bias for the trend on the shorter time frame, say the 1 minute, 5 minute, 10-minute, and then plus on top of that, looking at retail sentiment. Retail sentiment's always going to be there. So, but it's not always going to be leveled, right? In order for you to use retail sentiment, it has to be above or below 65%. So right here it's 63%. If that's the case, you're not going to have a bias for, or not a strong bias for retail sentiment. But the breakout does come up more often than the breakout 2.0 for sure. Daniel's asking, what lot size would you use on a 200K for that strat? You'd have to use something small because, well, which breakout are you talking about, Daniel? The breakout 2.0 or the regular breakout? I'm assuming for the regular, it's a 500 pip stop loss. So you're going to be using a lot smaller than what you would use for the regular scalps. Regular scalps are 300 pips, so you can use a bigger lot size. If you're doing the breakout, so the breakout and breakout 2.0 are totally different. Breakout is going to have a 500 pip stop loss. The breakout 2.0 is 1,000 pip stop loss. So there's a big difference there, right? If you're applying the regular breakout, the breakout 1.0, with 500 pip stop loss, you want to risk about like 1% on the trade because it's a 1-to-1 risk to reward. You're not going for like a negative risk to reward on that trade. So if you're going to be trading that trade there, let me see, I'm going to do the math real quick. 500 pip stop loss. You probably use like a 50 lot. Let me check real quick. Did you want to use a 1% risk? You have a $200,000 account. You want to risk 2,000. So you probably use you'd use about a 35 lot size or a 37. Let me check. 40. Yeah, you use a 40 lot because you're only going to risk about 1% off that specific trade. You don't want to take a huge lot size because if you take a huge lot size and then you lose the breakout, then you can't trade any for the rest of the day, right? If you're able to have the discipline and just take one trade a day, if you're going to take a breakout, then yeah, you can use a bigger lot size, but nobody ever has that discipline, right? It's easier said than done. A lot of people will say they have discipline, and then as soon as you try to take a breakout, you take a bigger lot size, and then you revenge trade after, you blow in your account. I've seen so many people do that. So if you're taking the breakout, you want to take maybe like 1% risk, because if not, then odds of you blowing your account is going to be very likely, like almost 100% likely. I've seen a lot of people blow accounts doing that. Taking the breakout like a huge lot size and then just revenge trading their way into a blown account. Let's see. So Daniel said, so 20 lots with a 2.0. Yeah, basically, let me check real quick. It's going for 1,000 pips. Yeah, you're right, 20 lots. Yeah, because it's a bigger move. You have to keep in mind that that move's going to run. It's like if you're taking the other trade, like the breakout 2.0 or even the breakout, those trades can last like the entire session. So like if your margin is tied up on that one trade, you're not going to be able to take any other scalps with us unless you take a smaller lot size. Because if you take it, even if you take like a medium lot size, like say for example, we already agreed to like 40 lots here, right? If you want to take like a 60 lot or something like that, it's going to eat up your margin. You can't take like multiple trades if you're stuck in that big position. And then it just ends up running forever, right? So like I think from today, let me see if I can check the market from today. So all right, from 6:30 to 8, let's go and just check the range real quick. So 6:30 to 8 o'clock, because price was pretty much ranging over here. All right, market opened right here at, let's see, 6:30, right? So market opened right here. So if you do the math right here, but with the range right here, you might be stuck in that position like pretty much all day. It moves about 1,300 pips, but not very much, right? So like say, for example, you're in a position, because so another strategy that people take would be the daily strategy. If you guys remember that strategy, it was like one of the main ones we'd apply. It was like one strategy a day, 10-minute daily strategy. This here's for 1,500 pips. So like, for example, if you took this strategy and you pretty much would have you'd still be stuck in the position for the entire morning because you're going for 1,500 pips, right? So, say for example, like the entry would have came right here, but it would already been past the time. So you're going for 1,500 pips. The trade would technically be running. So you'd be in this position for like pretty much all day. And if you still be in the position right now, this is why I don't apply the daily strategy anymore. You'd be in profit, but if you took this strategy right here for the entry, you'd be in this position for like hours and you'll still be stuck in it right now. So it just depends on the market conditions. Like we applied the strategy during COVID a lot. The breakout was good during COVID because the volatility was so high. Like market would open, would spike like 500 pips and you go straight to your TP. Nowadays, it's not like that anymore. Market's always changing or adjusting with the markets. So that's why I don't apply the breakout very much. A couple of strategies I don't apply very much is the breakout 2.0, and the daily, because the volatility is just not as high anymore. I created those strategies during COVID, and they work very well for us, but it just doesn't work as well anymore because the market isn't as it's not as volatile. All right, so let me see if there's anything else here. So Johnny, is there any other questions you have regarding the SR rejection or the breakout 2.0? I just want to make sure that we cover all your questions before we move on to the next ones here. So I think that was your main question, right, Johnny? Yeah, Johnny said, yeah, SR rejection, breakout 2.0, and then my top 3 strategies. All right, perfect, Johnny. Yep, no problem. Let me scroll up real quick and let me see what other questions. So let's see. Barty over here is asking, why did you stop trading momentum scalp, Sean? That was a fire one strategy. I just stopped trading it because the high-low momentum scalp is just easier for people to apply. The momentum scalp still works perfectly fine. It's just I try to make it as simple and straightforward as possible. But if you do want to apply that strategy, it still works very well. I think there was a couple entries today that came up. See market over here. I think this was a momentum scalp, right? Yeah. There was a couple momentum scalp entries that came up. It's just I try to keep it as simple as possible. The strategy still works fine. It's just we're focusing on like one strategy here because, as you guys can tell, if I apply like 5 different strategies, a lot of people are going to get super confused. You know, the main strategy we used to apply before was the momentum scalp variation, and momentum scalp failure. So if you guys remembered, like earlier this year, this was like our main strategies that we applied. It was momentum scalp failure, momentum scalp, and momentum scalp variation. And they came in order. They still work perfectly fine. It's just certain people were like screwing it up. So I had to change things up a little bit, but the strategy still works fine. So these strategies are still perfectly fine. If you guys looked at the market today, there was still a lot of entries that came up. There's a couple momentum scalp failures, momentum scalp. I think there was a couple here that you guys even identified yourself. Yeah, like this one over here. Like this right here was a momentum scalp failure into a momentum scalp variation into a momentum scalp. So right here, there was a sell signal was going against the trade. That would be a momentum scalp failure right there. So that's a momentum scalp failure, full TP right there. Price broken close past the pivots right here. That's a momentum scalp variation. And then it's also a momentum scalp on top of it. So this right here is momentum scalp variation plus a momentum scalp. And you would have 3 back-to-back entries right there, full TPs. So the strategy still works fine, Barty. It's just I don't apply it because people would get confused applying it. So I try to stick to the I try to keep it simple. That's the main thing. It's my main reason why I don't apply certain strategies. Because if people get confused with certain ones, I'll just make adjustments and then we'll use something that's a little more simpler, which is the high-low momentum scalp. Barty said, can you show today, could we have entry using the trend meter? I mean, there's a lot of entries that would have came up using the trend meter, Barty, but I'm not sure what you're asking. So Barty's question is, can you show today, could we have entry using trend meter? Yeah, there's a lot of entries here. So there's a lot of momentum scalps here. The trend meter was red pretty much all morning, right? I mean, it was buy too. So like trend meter was green, bullish momentum signal right there. That'd be a full TP. There's a sell signal right here. Trend meter is red, full TP. Trend meter is green, buy signal right there. Another one, full TP. It's super simple. There's a lot of entries here that came up. Another one, sell signal, trend meter is red. Another full TP right there. There's a ton of entries here that you could have taken, and they all would have hit full TP. So this is the momentum scalp strategy. Super simple, still works very well. It's just, it's up to preference. I mean, this is probably the easiest strategy, but people still screw this up too. I mean, everyone has their preference. Some people are good at certain strategies and some people aren't. So yeah, Barty, there's a lot of entries here that came up using the momentum scalp. Super simple strategy. It still works. So if you guys want to apply it, you guys are more than welcome to. It's just not one of the main ones that we focus on live. Last question from Barty. Barty's asking, you made 10K today, Sean? I actually made 18K today. So here are my profits right there. My first account made 6,580. My second account made 7,180. My MFF number 1 made 2,290, and my MFF number 2, 2,290. So 18,340 today across 4 accounts. I didn't trade my third MFF because I was getting a payout processed. Hopefully it's done by today so I can trade it tomorrow. But that's what I locked in for today. Today was actually pretty good. It was a lot better than I was anticipating. So that's it with Barty's questions. Let me scroll over here real quick and see if there's any other questions. Scroll down further. All right, next question here is from Martha. So Martha's asking, on a day like today where technical and fundamentals were not aligned, fundamental bias was flat, sentiment was strong bullish, timeframes were not aligned. What should we do when the strategy requires overall bias? So if it requires overall bias, there's no entry, Martha. So you can't just overstep the criteria. So if there's no overall bias, then there just isn't any entry. But today there was a bias. Like, it wasn't a strong bias, but it was still bullish. So there was retail sentiment was like 78% short or 68% short, and the technicals were somewhat bullish, but they started to shift. So when they're together, then they're fine. But when they start to shift, then there's just no entry, right? Because you can't just, there's no cheat code to skipping the step. You gotta, like, if the step's not there, there's no entry. You can't force anything. So yeah, that criteria is like one of the main ones. So yeah, if there's no, it doesn't have to be a strong bias, but if there's an overall bias, then you can take the trade. If not, then you just gotta wait for the overall bias to confirm. Like, I know you're only here for like a couple months, Martha, but if you were here like last year, we didn't really have a bias very much. So we'd go like days and days without trades, which was like, it became kind of annoying. So that's why I created the SR rejection scalp strategy. So this strategy over here was to apply when that was the case. So if that's the case where there's no overall bias, then we would apply the high-low moment or the high-low momentum scalp. Or where's it at? Sorry. SR rejection scalp, sorry. So you'd still use the trend here, but you wouldn't have an overall bias. So yeah, during that time last year, like last summer, the market didn't really have an overall bias, like for like days and weeks. So I created this strategy right here, and you can use this without a bias. I mean, it's still beneficial if you use a bias, but for the most part, you can use it without it. So we would pretty much opt to this strategy if there was no bias for, like, say, a couple of days. So, you know, I'm always looking for solutions. I have like millions of ways to make money in the market. And whenever if the market ever adjusts or shifts, we have a strategy ready for that. So I'm already anticipating the markets to be flat as we enter summer. It's currently going to be May. So like once we enter June, market's going to slow down a bit. It's the same thing every year. You know, all the market makers, institutions go on vacation during summer. So the market gets kind of flat. And then we just opt to this strategy here, and the strategy works fine during the summer. So I always have a solution, guys. So like, if you guys have been following me for the years, I'm always going to find it. You know, if the way that we trade doesn't necessarily provide opportunities, you know, we've been trading for a long time. So I have like a ton of strategies to shift to if that's required. So yeah, if there's any other questions regarding that, Martha, just let me know. But let me see if there's any other questions here. Cameron said we didn't take. Yeah, no, you're right. So sorry, Cameron. I saw your question, your message earlier, and I just noticed it again. But Cameron mentioned that we didn't take that 7 o'clock trade earlier today because there was news. So that's right. Yeah, there was a triple confluence like at 6:58, I think. But there was news at 7, so we missed that trade because I wasn't really looking to take any entries. So there was news right here at 7 o'clock. But there was the entries right here at 6. 56. It was too close. So I would have skipped it, even if I saw it right there. Even though the news did push in our direction. You know, it's better to be safe. I'm sorry. Yeah, exactly. Cameron said, yeah, for real. The more you trade, the more you'll see which one you like best. Yeah. It's a lot of entries there. PC's asking which pivot number should triple confluence go past? So here's a triple confluence right here. It just needs to be above the pivots, PC. So I'm just getting back to your guys' questions from earlier. So here's the triple confluence requirements. You just got to make sure that, so it says confirm prices above pivots for a buy or sell. So like, for example, right here, there was a buy entry here for a triple confluence. You just want to make sure it's above all the pivots. So we had the triple confluence right there. You can see that this candle right here broke and closed past the pivots above. So that's all you need to look for. No specific pivot, but basically all the pivots. Let's see. Yeah, no problem, PC. Martha's question is, it's not the strategy, Sean. The strategies are easy. It's applying it to the proper market conditions. In other words, it's reading the market to understand which entry is appropriate. Yeah, but that's the thing. All the strategies are the same. So you don't really have to read the market. You just have to make sure that the market is trending. So like, that's why that criteria for the overall bias and overall trend, it's applicable to all the strategies. If there's no overall bias or overall trend, then there's no entry. You don't have to read the market conditions. It's not that difficult to identify market conditions, right? You look at the trend. So like, for example, here, I mean, you can just eyeball it. You don't even have to really look at anything. I've made it so simple for you guys where like literally you just look at the chart, right? So here's all the charts right here. It's not really, I feel like a lot of people make it more complicated than it really is, because you're just not comfortable with looking at the market and just giving it a bird's eye view, right? So if I was to ask you guys what the market looks like right here, what would you tell me? Please tell me and say it's bearish, right? It's not bullish. That's definitely not the answer. So you just look at the market, right? Prices below the pivots, prices below the pivots, prices below the pivots, below the pivots, below the pivots, below the pivots. What does that tell you? Price is bearish. You look down at the bottom. What is a trend meter? Red, 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 green, right? Majority of them are bearish. So with that said, so, you know, I try to make things as simple as possible. And I try to like joke around with you guys because it's really not that serious, guys. Like, I feel like a lot of people put too much emphasis on like reading the market. You don't have to know exactly where the market's going. The bias is just going to show you guys what to like look towards. So if everything here is bearish, then obviously you're going to look for a sell, right? Prices way down here, you're not going to look for a buy. Obviously, it's not a good example right now because the market is just reopening. Things can change during Asia session, but you know, reading the market is really not that difficult because I already gave you guys the criteria. You look at, so for one, you look at fundamentals, and it's pretty straightforward. I tell you, if it's below 100 points, it's bearish. If it's above 100 points, it's bullish, right? You look at retail sentiment here. Retail sentiment, it's always going to be, heavier on one side. Typically, you want it to be above 60% or 65%. That's going to show you like where you should probably trade. And then the technicals here, right? So you're just looking for like the majority. You don't have to be perfect with regards to your market analysis. Looking for entry points, that's different, right? For entry points, that's why we have strategies. But looking at overall bias, it's not that difficult. You're just looking at fundamentals. And if it's hard for you, then you just need to practice more, right? That's really the key there, because I've already given you like the blueprint. It's really just following directions. Yeah, no, Martha said she overcomplicates it. Yeah, I mean, it's not just you, Martha, it's everybody. There's a lot of people out there who are in the same situation. I feel like you guys try to make it like more complicated than it really is. That's why in the live session, I'm never really stressed out, right? I'm just kind of looking at the charts, and if I see something, then I'll take it. But I've been doing this for so long that it's like, it's just second nature to me. I don't really have to think too much when taking entries. But, you know, it'll come with time, Martha. You just have to give it more time, and you have to give it more practice, right? You've only been trading for so long, so it's not going to come like second nature to you just yet. But if you keep trading and you keep practicing every day, you're just going to get better. It's inevitable. So yeah, I'd recommend to just, you know, don't be too hard on yourself, because you're gonna make mistakes. It's a given. But the main thing is that you learn from your mistakes. So don't make mistakes and don't keep making the same mistake, right? If you're making a mistake, you got to document it because you're never going to get better unless you fix your mistakes. So you just got to be real with yourself. You know, if you misidentified something, just, you know, just take it as a lesson and then move on to the next one. Yeah, exactly. You know, Martha said she's going through her growing pains right now. It's all good, Martha. You haven't been trading for long enough. I mean, you know, typically a lot of traders don't become successful within have that one thing that kind of wakes them up, and then they really, you know, take off. Yeah, Martha said 20 days on a live account. Yeah, no, you've been trading for like 20 days, right? You can't be hard on yourself. You're gonna make mistakes. You're probably gonna blow that account, just to be straight up with you. But you know, if you blow the account, just you know, just keep bouncing with it. I mean, you just got to keep rolling with it. Because I've been trading for a long time. I wasn't successful with trading until like 4 years in. So I traded for 4 years and I just blew all my accounts. And then well, the thing is, I never had a mentor. So like the good thing for you guys is that you guys have me to ask questions. I never had a mentor. So I kind of just made mistakes and then I learned from it. So just keep that in mind, guys. You know, if my time is 4 years, your guys' time should be a lot shorter because you guys actually have me to ask questions. So if there's anything that you guys are confused about, you know, you guys are always welcome to reach out to me or ask a question here on the live sessions. Anyways, let me scroll up again and see if there's anything else here. Let me scroll down a little bit. Yeah, so Martha said, for example, for me, the momentum scalp is the easiest thing, but it requires trend. And if you don't know how to establish trend, it won't work. Yeah, exactly. So that's why I don't really teach it as often, because a lot of people, like I use 3 screens here. And for some reason, with a lot of people, this is like really difficult for someone to look at this and identify the trend. I mean, realistically, it's pretty easy. If you can see right here, prices below the pivots, trend meter is red, pivots are angling down. You look for the same thing here on the 5. Prices below the pivots, trend meter is red, pivots are angling down. 1 minute over here, prices below the pivots, trend meter is blue, starting to shift to the red. You could assume that this is bearish, right? So I think it's just a lot of practice and repetition, guys. Because for me, I mean, obviously it's a lot easier for me, but for some people, this is still confusing. That's why I don't really focus on the strategy too much, because a lot of people get confused looking at multiple charts at once. Scrolling down a little lower, let me see if there's anything else here that I'm missing. Let's see, question from Dan. Dan's asking, is there a time limit, maximum amount of candles between the momentum scalp variation hitting and the momentum scalp entry that would stop you from taking it? Not necessarily, Dan, because like, for example, the entry that came up earlier today, it happened on the same candle. So generally, there's not really I think I mentioned something during one of the live sessions. Let me see if I took a note of it here. Let's see. Momentum scalp. Because your question, I know there's an answer to your question that's like, but I can't remember because it's been so long since we applied the strategy. But generally, there's no criteria for that, because sometimes if the market's consolidating, then it would just take a long time, but eventually it will play out. But generally, if the market is consolidating like that, I would typically just skip it. So short answer to your question is no, there's no specific limit or maximum between like both entries. But if the market goes sideways, so say for example, I'll see if I could find one over here. No, so this one here is fine. There was a sell here that came up. I was trying to find a bad example here, but this example is actually good. So there's a buy signal right here. This would be a momentum scalp failure right here, right? Hits TP right there. Okay, actually, so this is it's not like an actual requirement, but I would actually skip the momentum scalp variation. So see how this entry is running for like a long time? This one's running for like 10 minutes, right? Technically, this right here would be a momentum scalp failure, that buy signal. And then this one right here next to it, this red candle that comes back down, this would technically be a momentum scalp variation. So for me personally, I would have just skipped the second trade. I mean, I wouldn't even have taken the momentum scalp failure because I typically don't like to take that trade. But I would probably, you know what, I probably wouldn't skip the second one, but I would probably skip this one over here, the momentum scalp. So this right here is a momentum scalp failure. This right here is a momentum scalp variation. And this right here is a momentum scalp. If you guys remembered in the past, I would usually wait for this trade to play out. And then if this trade did play out, then I would look for this one here next. So I would maybe have taken this one right here, the second one, but I wouldn't have taken the momentum scalp over here. Because you can see over here when the momentum scalp came up, the trade's still technically running, right? So I'm not sure if you're around, Daniel, when I was applying this strategy. I think you were, because when you joined, I was teaching you guys these strategies here. So for me personally, I would probably take the momentum scalp variation. I wouldn't take the momentum scalp failure, and I would just skip out on this momentum scalp over here because price would have been consolidating at this point. So there's no specific candles that you would wait. There's no limit or maximum, but typically I wouldn't want to take it if price is consolidating. That's just the main thing. All right, let me see if there's anything else over here. Let's see. Sorry, Dan, I got Dan and Daniel mixed up. So I'm not sure if you're around, Dan, when we were applying that strategy, but if you were, I know Daniel was, I'm not sure if Dan was. So if there's any questions regarding that, Dan, just let me know. But for the most part, there's no specific time limit. If price starts to consolidate, I'm just going to not take the trade because it's a directional strategy. So Daniel here said, I noticed that often when we don't have a lower low or higher high, but we have high lows below the pivots and the entry candle closes past pivots 1 and 2, it still hits. Yeah, no, it does. So it does hit, Daniel. That's actually how the strategy started. So before, we weren't using higher highs and lower lows. Initially, we were using pretty much any highs or any lows, right? Any high lows. So it could have been a lower high or it could have been a lower low. Like for example, right here, there's a higher high and there's a lower high right here. I probably would have still used this one and would have taken, like say this trade right here. But for my testing, the problem with this here is that these repaint. So Daniel, if you look at the charts, it looks good when time's already passed. But if you're looking at it real time, it doesn't look as good because these candles here repaint. So these lower highs aren't always lower highs, right? If price pushes down and it comes back up, it just keeps pushing the lower highs higher. So of course it's going to look good after the move is already played out. But if you're looking at it real time, it doesn't look as good because there's a bunch of different lower highs in between. That's why we changed it. Yeah, so you sit over here at 656. Yeah, like this one over here, right? Like you mentioned. Yeah, but see how these repaint? They just keep repainting. Like there was a lower high that was here. And if you want to apply it that way, you're more than welcome to apply it that way. But I've tested it and there's a lot of entries that come up, but there's also a lot of losses. So if you want to test it, that's how the original strategy was created. And originally it was just any high lows, but we started to run into a couple losses. And that's where I changed it because the problem with this here is that it repaints. So see this right here. I mean, you can see it. This price moves along. Let me just clean up the chart a little bit. It looks good after it's already played out. But during the live sessions, like when the market's just going, when it's moving, you'll see that these high lows get repainted. So for example, there's like one right here and it just repaints, right? And there's another lower high there and it just keeps repainting. The lower lows and the higher highs are more well established. because typically that's where the price starts to swing the other way. But yeah, if you want to apply it, you can try it out, and yeah, you know, it's just up to your preference. But I tested it, and you get a lot of fake outs that way. So like, not one that I would specifically want to apply myself, but it does work because that's originally how the strategy was created. It was just based off the any high lows and continuations from there. So yeah, Dan said he was around. Really like the variation momentum scalp following it. I've seen some overlap, big gaps in between them. It's kind of off-putting, so I will avoid those types of ones. Thanks for the insight. Yeah, no, definitely, Dan. Yeah, no, you were around from back then, so you know what I mean. We typically they come up like right after each other, but if they take really long for them to show up, I typically just skip them. But there's no real time limit. It's just basically when price is consolidating, because we've been having that a lot lately when we've been applying these strategies. So, I mean, if you like them, you know, feel free to apply them, but probably just keep that in mind if you do have an entry where it comes up like super late. Let's see if there's anything else over here. Yeah, exactly. Herman said we just have to be right 10 points without being wrong 10. Exactly. Or being wrong 30. Let me scroll down a little bit. All right, so I think that might be it, guys. Let me see. There's one more question here from Barty. Barty's asking, when does options expire? Is it 12 or 11:30 Eastern? I don't know, Barty. Honestly, I don't know. I don't trade options anymore. Haven't traded options in like 8 years, so I have no idea. Usually the option contract lets you know when they expire. They don't always expire on the same time. Some of them have a set time when they expire. Some of them have a set date. So you have to check the actual contract to see when the expiration happens. Yeah, I personally don't know because I haven't traded options in like 8 years. So I have no idea if things have changed, what broker you're trading with. They're all kind of different. I mean, depending on which option contracts you're trading. But all right, guys. So if there's any other questions, feel free to put your questions in the chat. I think we covered pretty much everything. If I missed your question, guys, just go ahead and drop your question in the chat. I can help you with whatever you guys need help with. But I think that's about it. We've been on this live session for about an hour and a half, but I'm willing to stay on here longer. If you guys have anything else that you guys want me to cover, just drop your questions, and then we will cover whatever you guys need help with. Yeah, I don't think I have any other questions here. All right, let me just check the calendar real quick. I want to see what's coming up tomorrow. So tomorrow, April 26th, Wednesday, we have core durable good orders, good trades balance, prelim wholesale inventories. So we have a lot of pre-market news right here. We have crude oil inventories at 7:30. And that's about it. Medium to light news tomorrow. Let me check my FX book real quick. All right, Wednesday 26th. Yeah, not too much. There's a NBA 30-year mortgage rate, mortgage applications, mortgage refinance index, mortgage market index, pre-market as well. So there's a couple of news events happening pre-market, 4 o'clock, 5:30, and then oil news at 7:30. That's about it. Yeah, so tomorrow might not be too crazy, but there is some news events. Let's see, one more question from Andy. Andy's asking, hi, Sean, what's the minimum requirements to establish bias? So yeah, sure, let me pull it up real quick. You just need 2 of the 3, basically. Thought I had one here. Okay, overall bias. So in order to confirm the overall bias, here is the markup. So first, you want to confirm retail sentiment. So you want it to be between 65 or you want it to be between 60 and 65% or more. So like looking over here, first step, look at retail sentiment. You can see right here that it's 63% short. So this is going to be one step to the bias, right? So if you have this right here, the first step right here is going to be bullish, right? Second, you want to confirm fundamental bias, right? You want to make sure whether it's above or below 100 points. So looking over here at CNBC.com, you can see here that it's down 300 points. So it's obviously bearish, right? So you got one bullish bias right here. You got one bearish bias right here for fundamentals. And then for technicals, wherever the technicals are going, that's what your bias would be. So now looking over here on the shorter time frames, you can see that's pretty much neutral, right? So 1 minute's neutral, it's in between the pivots. 5 minutes neutral, it's in between the pivots. 10 minutes neutral, it's in between the pivots. If everything here is neutral, then you don't have a bias, right? Because you have a bullish bias for retail sentiment, bearish bias for fundamentals. And then for technicals over here, you have a neutral bias. So if you have something like that, where technical is neutral, fundamentals are bearish, and retail is bullish, then there's the minimum requirements are not met. You need at least two of them. So if technicals here were bullish, like say for example, I mean they're not bullish now, but say for example the technicals were bullish, right? So you got retail sentiment that's bullish, you got fundamentals that are bearish, and you have technicals that are bullish. If you have that 2 out of 3, then you can look for buys. Your bias is going to be bullish, and then vice versa. Say for example here, retail sentiment is bullish, fundamentals are bearish, technicals are also bearish. If that's the case, then you have bias for a sell. Best case scenario is you have them all lined up. Like if they're all bearish, then perfect. You have a strong bias, right? But yeah, that's pretty much how you do it, Andy. It's not super difficult. Like we mentioned earlier, Andy, like with Martha, it's easy to overcomplicate it, but just stick to the fundamentals, like basically the basics. Because the thing with the market is that the market can only go 3 ways, right? You guys got to remember that. I feel like a lot of people forget that the market can only go 3 ways for the most part, right? Price is either going to go up, it's going to go down, or it's going to go sideways. And even if it goes sideways, eventually it's going to go up or it's going to go down, right? So you could only be wrong to some extent, right? If you have a simple confirmation to overall bias, everything's bullish, then great, because you can take that buy there, price will retrace, and you just keep riding that up higher and higher until it's done. And then vice versa the other way. If price is bearish, you write it down, retrace, and you just keep riding in that direction. The market's kind of changed a little bit though. So if you guys have been trading with me over the years, every year is a little different. COVID was really nice because everything was bearish for like a couple months, and then everything was bullish right after that. We're going to this recession, so I'm excited because I think once the recession officially hits, obviously, where do you think price is going to go? If the recession comes and hits, price is going to keep going down, right? So we can just look for sells in that case. This is like how it was during COVID. COVID happened during March. During March until June, we were just taking sells the entire time. It was so easy. You could literally take a sell and you'd make money no matter what. So I actually want price to do this because eventually price is going to have to recover, right? So we have price coming down, and then say after the recession is starting to recover, then we can start looking for buys here, right? So it's really just playing the market as it comes. I never really predict what's going to happen. I take the market as it comes. And I think that's the best way to trade. So, all right, guys, I think that's it for the questions. If you guys have any other questions, feel free to put them in the chat. Just a reminder, guys, all these mentoring sessions are recorded. So I know some of you guys asked during the live today if this is going to be recorded. Yes, it is. In order for you guys to review it, just go to our website, kodikaitrades.com, click on get your access to the live sessions, or just go to the YouTube channel, youtube.com/kodikaitrades. If you scroll down over here, everything with the blue background is a previous live trading session. I trade live every day, Monday through Friday. Everything with the gold background is everyone's profits on the daily. Everything with the green background is going to be every mentoring session. So if you guys want to see what we covered last week, just click on this here and you guys can view mentoring session from last week. Everything with the red strategy. So if you guys want to go and review any of my strategies, just pull up the red background over here, anything with the red background, and you guys can watch all the strategy videos here. So I think that's about it, guys. So if you guys have any other questions, feel free to reach out. I'm here to help you guys out, guys. There should be no reason why you guys are not successful trading. I mean, it's not going to happen overnight, but eventually, if you guys keep at it, you guys should be successful to some extent. One of the guys here, which is a clear example, is Madhu. If you guys remember Madhu in the group, Madhu wasn't doing good for a while. He was actually about to quit. like Anelli wasn't doing good for a while. He was like literally going to quit, but you can see here. So the first time Madhu messaged me and joined the group was in April 24th of 2021. So he had no experience trading. He joined me in April 24th of 2021. He went from like blowing accounts and not being really consistent to getting max funded on his FTMO. So he has 400K in allocation for FTMO, and he has over like 40K payouts. So guys, this could be you. I mean, if you guys are having problems, the thing with Madhu is he actually reached out. He reached out to me. He worked directly with Sisuk. So like, you know, if you guys don't want to ask me for help, Sisuk's probably going to be like your next best option. Maddie can help you too, but Maddie's a little busier. But you know, if you want to, like the thing with Sisuk is he's going to be really tough on you, but he's going to really push you to like learn and get you to your limits. So if you guys want to learn, I mean, you guys have seen Sisuk's profits in the group. Like here's Sisuk's profits from today, right? Sisuk's up 1,900, 1,900, 2,000. And that's Sisuk every day. If you look at his profits from yesterday, he's up 4,000 yesterday, 2,000, 1,700. That's him every day. So, you know, if you guys want to get a mentor that's really going to like drill it down on you and really get you on point, then Sisuk would probably be your guy. Otherwise, you know, I'll try to help you guys as much as possible. And I think that's it. So, all right, guys. Other than that, I will see you guys back here tomorrow. If you guys have any other questions, feel free to reach out. You guys can message me on Telegram or email me, Sean@KodiKaiTrades.com. Otherwise, I'll wrap this up. So, all right, guys, I'll see you guys back here tomorrow, and we'll pick back